You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-exciting Options Insider Radio Network. If you don't know it by now, we have a robust baker's dozen worth of programs for you guys to check out on the network, including many, many hours, well over 100 archived episodes of Volatility Views for you guys to enjoy. If you haven't gone back and checked out the archives of this show and you're new to the show, you're doing yourself a disservice. There have been some really, really great discussions and some really great guests on during those 100 plus episodes, all of which, particularly the guests, are all evergreen. You can listen to them anytime, anywhere. Their conversations are still as relevant today as we were whenever we recorded them. So I encourage you to check those out. And where can you find those great archived episodes? Well, of course, theoptionsinsider.com. Just click on the Insider Radio Network tab there at the top of the page, and then, of course, you're off to the races. You're off and running. You'll see the full overlay come up with all 13 programs, and then you can choose till your heart's content and listen till your heart's content. Of course, you can also find us on all of the leading audio providers: iTunes, Stitcher, AHA Mobile, TuneIn. I'm sure I'm forgetting a few, but there are a legion out there. And if we're not on one you like to use, let us know. We'll make sure to add it. And, of course, if all of that was too much for you, you don't want to deal with any of that hassle, just download our mobile app, Options Insider Radio Network mobile app, available for iOS, Android, and the slowly growing Fire OS. And you can be off to the races as well. All that stuff's baked into there. You can build your own playlists, make a Vol Views playlist, make whatever shows you want playlist, listen till your heart's content. And then when you're done listening, or while you're listening maybe, you can fire off some questions, some comments. No shortage of ways for you guys to do just that as well. So we love to hear from you. In fact, we'll be featuring a few more of your comments today. You guys have been writing in with gusto into the old program. We have a bit of a truncated panel on the old Vol Views program today. Mr. Jared was called away on assignment at the last minute. We're recording at a little bit different time today. So we'll be joined forthwith by the greasy meatball himself, Mr. Mark Sebastian. But without further ado, let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, you know the drill by now. This is indeed the Volatility Review portion of the show. It's a portion of the show where, as the name implies, we look back on the week that was from a volatility trading and analysis perspective. And if you're playing the home game, today is February 13th, Friday the 13th, I should add. So bear that in mind in today's activity if you see any dubious stuff floating around out there. And that ethereal voice in the background could be none other than Mr. Mark Sebastian, the greasy meatball from Options.
Longo.
From Options.
I am the ghost of Butter Futures Past.
Yes. Those days are very much past if you've been paying attention to the news of late. Welcome back to the program, Mr. Sebastian. How are you doing?
I'm good. It's a nice day. A little cold here in Chicago. A little cold, but aside from that, all is well.
Yeah, we've been spoiled by the fact that it was over 40 degrees for the better part of the last week, and so we kind of got started to expect that, I think.
Exactly. Yeah. Things have been kind of nice. Maybe a little too nice.
Nice, maybe too nice. Maybe that's a good way to describe the markets this week. So I think without further ado, we'll get into it as we're recording today, of course, right around a little bit earlier today, I said, on Friday the 13th than we normally do here on the old show. The market's kind of begrudgingly moving northward, but not really the resounding rally like we've seen in previous sessions. Most of the major indices up about 0.25 percentage point. But that's enough to set some new record highs. The Dow's over 18,000 now, and the S&P at some record levels. Right now we're at 2093 in the S&P. And, of course, the VIX Cash ticking off a wee bit on the downside, hovering right around the 15 handle. Let's start there as we are wont to do. This is actually, as I'm looking right now, this is the new low for the VIX Cash for the week. We had a bit of a range this week, as you might imagine. A high of about 19.25 or so, and a low right around where we are right now, right around the 15 handle. So about a little over a 4-point spread in the old VIX Cash this week. Looking out there in S&P land, it's been another interesting week from an S&P vol as well. We've seen, like I said, VIX Cash coming off. We've seen a lot of rallies over the past week as a lot of information, a lot of earnings, a lot of other news kind of combining to lift the market, pull it higher. We're seeing implied vol creeping down a little bit, as you might expect out there in S&P land. 30-day implied hovering right around the 13 level right now, and then the historical looking back, and we've had this discussion many times on the show recently, implied versus historical, and how do we make those two fit together? What exactly is the definition of a risk premium? I think we have a few more questions along those lines to get to in a little bit later today. The 30-day historical looking at a nice healthy 16. So I'll leave you to figure out the interrelation between the 30-day historical, 16, VIX Cash hovering right around a 15, which is ostensibly the implied out there in the S&P land. The actual 30-day implied right around a 13 level in the S&P. And of course, our friendly neighborhood Skew index, which is supposed to tell us the market's sentiment out there in S&P land. We've talked a lot on recent shows about sentiment out in products like Apple, puts getting very rich out there. S&P puts creeping up, but still not as perhaps as juicy as you might expect. Of course, we said on recent shows, of course, here as well, that the Skew index can be impacted by a number of other factors, not just put premium. So bear that in mind when we're talking about all things S&P Skew. And Mr. Sebastian, it was indeed an interesting week, a bit of a wild ride week throughout most of the major indices. What caught your eye from a volatility perspective this past week?
Well, we had a little bit of a flush out. The VIX came from somewhere, I think we're 19 or almost 20 on Monday morning, and has fallen almost 20%. I'm kidding.
You did it. Percent over percent. You've fallen into the trap with the rest of us.
I know. It's fallen. It fell almost 4 points and is now trading below more than 4 points and is now trading below 15. Now, obviously, we're heading into a long weekend. So there's going to be a bit of a adjustment back when the market opens on Tuesday. But even adjusted for the weekend, the VIX fell from a little above 19 to what is going to amount to under 16.
So did any of that downside move, did it come as a surprise in terms of maybe perhaps the extent of it? Did you think VIX, given all the rallies we've seen in the broad market this past week, did you expect it to sell off as aggressively, or is it perhaps a little bit overdone compared to what you expected?
I thought we had a bit of I was surprised how the market took all this Greek stuff, decided to not care about the Greek stuff anymore. It happened quicker than I was thinking and probably is overdone. I don't like to say that I would be a vol buyer, but I don't know that I would be much of a volatility seller here. And so I'm not certainly not jumping into any trades on as of right now.
Yeah, you're right. The focus certainly seems to have shifted from a week or so ago when it was very macro, Greece, Russia, all that other fun stuff going on out there, to this week. Of course, we saw some record earnings, some record quarters from names like Apple and others, and that really seemed to take center stage this week. So it seemed to have much more of a domestic focus this week, and that appears to be enough to carry the market north because we've just been in rally-ho mode ever since, which is interesting. And you're right, people like you have been kind of talking about Greece, and Greece still, I mean, Greece is echoing there in the background, but it's not really driving the cart anymore, it seems like.
No, I agree. And, like I said, we have an old friend that used to say there are options that should be sold and options that should not be sold. And clearly options should have been sold at the beginning of the week. Now that they've been sold, I'm not sure that I would continue to sell them.
Well, speaking of those old friends, I suppose I should mention them now because this is an appropriate place to do that. Our old friends over there in the land of VOLX have risen like the phoenix from the ashes and never really went away. They just kind of went on hiatus for a little bit. And if you've seen any of the headlines on the Options Insider or others this past week, listeners, you know that they have indeed relaunched their contracts as the RealVol contracts in partnership with the Boston Options Exchange. So if you've been looking for that implied product of what they were talking about on past episodes of this show, intrigued you from an implied volatility versus realized volatility perspective, I know a lot of our listeners, they start trading the implied products and they start saying, well, I wish I had a product that did X. Usually that tends to be something that reflects more realized vol in the marketplace. Well, that's what the folks over there at Volex are attempting to create. And so we should be seeing that. It's open for comment now. It's up on the SEC comment website. So there's a comment period right now. But once that's done, we should hopefully see that product get approval, and we should see it out sometime. I guess probably at this point, probably maybe Q2 might be a little bit early, maybe Q3. And that would be an interesting thing. And of course, the folks at BOX, the Boston Options Exchange, have certainly not been reluctant to champion esoteric products, shall we say, in the past. They, of course, of the Jumbo SPY fame. That product didn't work out too well, but I think there might be a little bit more impetus behind this product because at the end of the day, this realized vol product is not cannibalizing anything else except for VIX, and only SIBO has VIX. So I think a lot of other exchanges will be interested to jump on board with something like this, and certainly BOX will. Looking out at some other products, speaking of VIX and other products out there, we talk a lot about the volatility of VIX. That, of course, is tracked by our old friend VVIX, and we talk about that a lot here on the old program as well. And VVIX, as of going into Thursday, was off a little bit from its highs, but still not in that record, of course, 140 level. It's kind of been doing that dance, it seems like, between 90 and 100 or 110 or so for the better part of the past few weeks. We're on the lower portion of that curve right now, as you might expect. We're hovering right around a 93 level or so. We'll see if we get another crazy spurt to the upside in VVIX land, or if it's going to kind of just slowly meander back down maybe to the 80 level or so, where it spent the latter portion of 2014 until all this craziness started to ensue. And looking over onto the realm of VIX options, it was another relatively, surprisingly, I would say, light volume week. Most of the days well under the ADV, substantially under in some cases, except for yesterday. That was Thursday the 12th. We had a strong rally in the market. Most of the major indices gaining about 1% or so, and the VIX options following suit. It's interesting. You usually don't see VIX printing that hard on a 1% up move day, but it did about 700,000 contracts yesterday, which was definitely the highlight of the week in terms of VIX. So we're starting to see some paper flow in, even though it's still relatively light from an open interest perspective. And looking at what strikes were catching the eye, catching the imagination of the investing populace out there. The number one strike we have this week is, of course, the Feb 14 puts, pretty much about 322,000 contracts open over there on the old Feb 14 puts. And we move to the call side of the fence. Feb 25 calls, about 245,000 to be precise, open on that strike. Then we drop. You can see already a pretty big drop from the number one to the number two spot. Number three, Feb 15 puts, so some more puts lighting up the tape to the tune of 210,000 contracts open. Then the number 4 spot, the Feb 30 calls, 181,000. Back to the puts for the number 5 spot, the Feb 16 puts with about 142,000 contracts open, about the same number for the Feb 17 puts, about 142,000 as well. So they're neck and neck there. Lots of puts lighting up the tape this week. Number 7, The Feb 20 calls with about 129,000. Then we really get down to the low numbers here. The Feb 18 puts about 107,000. The March 20 calls and the March 25 calls with 95,000 and 91,000 respectively. So you guys can see, if you've been listening to the show for any period of time, just how anemic some of those latter portion of that list really is. Breaking into the top 10 with south of 100,000 open interest in VIX land is a rare occasion. And the numbers are fairly light overall. Total outstanding open interest, about 5.3 million contracts, about 3.2 on the call side, actually close to 3.3, and about a little over 2, about 2.1 on the put side. So put still, as we've seen from the top 10 list, put still hanging in there, a lot more put heavy than VIX typically is. Mr. Sebastian, anything catch your eye out there in VIX land from a volume or an activity perspective? We talked about the VIX Cash obviously selling off this week. Anything in the VIX options or futures land really catch your eye this week?
Nothing absolutely popped. We do see a lot of, obviously everybody's shutting down February, and people starting to look at opening March and April hedges. So some trades I've seen have been, some March flies. We saw the 18, 23, 28 fly get quoted. Saw some outright buyers in June calls. So I do think there is some where I think, one of the things you and I had noted is that the volume had kind of dried up. Well, maybe because VIX had been hanging around 19. Now that it started to hit that 14, 15 level, I would be unshocked to see an increase in call activity in VIX somewhat quickly.
I like that new technical term, unshocked. That's a good one. Maybe that's a good title for our episode today, unshocked.
Unshocked.
We were talking on the last episode, Mark, about the extended hours out there in VIX land. Does that entice you at all? Does that intrigue you to start in the VIX options extended hours on, Monday, March 2nd, SPX to follow a week later? Does that excite you, or you're not really into the extended hours game?
No, I think it's a great idea. I'm very excited about it. I think where I think there could be some volume is in SPX. I'm not so sure how much extra this is going to add to VIX, but I could absolutely see SPX catching a lot of off hour volume, and probably this SPX will probably hijack some volume from the CME in their futures product.
Yeah, I'd wager. You and I have joked. How many times I used to joke when I was on the SPX floor, and a lot of guys did that. Whenever the phone rang, there was a very good chance there was a French accent on the other side of that phone. I'm not sure what the interrelationship is between the S and the French institutional audience. Clearly, the large amount of them have been entranced by that product. So adding more hours can only help that audience. Was that a joke you guys had out there too? Because we always just say, it's got to be yet another Frenchman on the other side of the phone.
No, I don't recall making fun of the French as much, but I was obviously there after things had picked up dramatically. When I was working in that pit.
It wasn't so much insulting the French as just remarking on the incredible number of French participants.
The French were the product leaders of the SPX, and
definitely
we had lots of people follow them. Same thing actually in VIX. There were some big London and VIX traders, huge, and London and Paris is a big piece of why the SIBO opened a London VIX exchange.
Certainly does make sense. Talking about other VIX-related products, there's not much really to chat about. We've talked about the mystery that is VXST. Several other episodes. It seems like that mystery continues to deepen. Looking at the numbers today, I said VIX open interest is anemic. Well, it doesn't come close. VXST currently right now, overall open interest sitting at a whopping 3 contracts. At least it was as of last night. So that's impressively low, no matter how you want to cut it. It really. That's something. This product, for a while there, had several thousand contracts open interest, was hitting some decent volume numbers for a brief period there. And then it really seems to have just fallen off a cliff, both literally and figuratively here. 3 contracts. That's amazing. When you compare that, we don't talk about RVX as much on the show because it hasn't done as much. When you compare that to RVX is lighting it up. RVX with a whopping 60 contracts open on the open interest. So who'd have thought that? RVX cleaning VXST's clock. out there. So that's an interesting one. We'll have to bring our friends over from Russell on so they can tell us some of their plans for what's going on out there in RVX land, as well as some other products they've been hinting to me about over there in Russell land. And hopefully we can talk about them on the show sometime soon. I think that will intrigue a lot of our listeners out there. Now, Mark, this is usually the portion of the show where I toss it to our friend Jared, who likes to pontificate on all things international vol. He likes to look at a lot of volatility going on beyond our domestic shores. So he couldn't make it today. So, of course, I will give you the same opportunity if you're up for it. Anything catch your eye in the international volatility spectrum?
RSX, which is the Russian index. You know, the vol's been crashing in that since it got real high. You know, back in kind of the early part of the month, the RSX was into the vol was into the 70s. It's now back down to about 48, and it's had a nice rally. You know, EWZ is another one where, you know, if you look at where volatility has really fallen off as well. So, you know, one of the spaces that has really led to the S&P being lower is that some of the international stuff has cooled off. So, you know, markets really across the board, vols lower. The only real area where I see continued high volatility relative to where they've been is in the currencies. And and Treasury vol has managed to stay above 6%, which is, for Treasuries, at least over the last few years, a lot.
Yes, that is certainly something to comment about. And since we're talking about Treasuries getting into the commodity and futures landscape, let's dive into the hot area from a vol perspective. Still, these days, we had that brief flirtation with the currencies, but all eyes seem to have been pulled yet again back to the ongoing battle out there in crude land. It seems like that struggle for hearts and minds around that 50 handle continues. You know, you're watching the March WTI future flicker around that level for the better part of the last week or so. It seems to be where a lot of the bulls and bears have galvanized these days. You know, the bears trying to claw it back down south of 50. They've succeeded a few times recently. The bulls trying to pop it back up above 50. It seems like that's where the bottoming out level is. The bottoming out battle, I should say, is really taking shape. So it'll be fun to watch that. And that, of course, has translated into vol hasn't really increased out there. It's more as kind of been kind of hovering near the course. We talk about OVX a lot out here. That, of course, isn't direct crude vol. That is, of course, USO and OVX kind of hovering right around. It was hovering that 60 level, coming off a little bit today, coming off to about 56.5 or so today. Mark, I know you guys watch a lot of USO and OVX in that pit chat over there at your site. Anything really catching your eye out there from a vol perspective this past week?
Oh, yeah. I mean, I think OIV is probably really expensive. Those little 1x2s that Jared and I talked about a couple of weeks ago still look interesting and juicy. And, you know, I do think there's a sale there in the volatility. It's clearly still at these panic levels and is not moving around that much.
So would you be more straight up selling, like leaning into selling some downside and legging into some attractive levels that way, or maybe doing at the money and then taking advantage of some of those tails being inflated and legging into some verticals?
I think that there's seriously some money to be made in kind of doing 1x2, bare 1x2. So, you know, this is going to be in USO because I can't open my futures thing because it will affect my voice. But, you know, even in USO, going out to April, vol is 52%. All right. I can get, with the stock at 20, I can get 20 cents for the 14 puts in USO. That would be the equivalent of that, you know, that's Citigroup. That's Citigroup's call starting to look pretty good. So I think there's lots of money to be made doing these little 1x2s. Personally, obviously. So a trade that I might find interesting in something like USO would be like the 15-14 put 1x2 for a dime, you know, and collecting a dime on that. If I can do that, I mean, will I buy USO for $12.90? Will you buy it there, Mark?
Yeah, I probably would put some in my back pocket there. Yes.
Yeah, I mean, you can get paid to basically be long at a level that you'd be stupid not to want to own oil. I say that now, and of course, USO is going to go to 6.
Yeah, I'm sure someone was saying that back when crude was 90, saying, I would love to get in at 60 on the 60 handle in crude, with my 1x2. So, of course, those are famous last words. But these levels are getting even more attractive, obviously, by the day. You mentioned the inflated levels out in OIV. We did have that sell-off in crude earlier this week, and so we did see OIV spiking over the 70 handle very briefly. Got out to about 71 back on the 11th, hovering today right around south of the 60 handle, about 58.5 or so. So vol has come in a little bit since those. I'm sure that spike's going to return. We're going to see more periods of inflated vol out there as that push and pull around that 50 handle continues to unfold in the coming weeks. I'm very curious to watch that. I think a lot of people are watching that push and pull around the 50 handle. Citigroup's nonsense notwithstanding, I think a lot of people, the rational folks out there, are certainly setting up that's where the battle is really taking place, on that 50 handle. If we get well south of there again for a protracted period, maybe there is more bearish activity, more bearish sentiment ahead for crude. All right, and with that, we're going to keep on rolling into my own personal favorite portion of the show, because it's your part. It's time to check in on the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the volatility voicemail. Like the man said, this is the portion of the show where you guys get to send in and chime in with your questions, your comments, your insights, and share them with us here on the panel, as well as all of your fellow listeners. And Mark, I'm not sure if you recall from last week, but Jared got off onto a very interesting tangent when we had a listener with the handle of Uncle Ben listing all the myriad corporate logos that he found to be racist. And it was a very, very, very interesting sidebar for him, and it certainly seemed to consume him for much of the latter portion of the show. Because
Jared went off on a rant explaining what corporate logos are racist.
He started throwing off other names like Aunt Jemima, and then later on he got onto the cream of wheat guy, I believe, and so it was very impressive to hear. And so
Uncle Ben. There's in Grand Haven. I love this in Grand Haven. There is a bar called like the Come On Over or something like that, they serve Mexican food, and the sign is literally a Mexican in a Hispanic person in a ridiculous sombrero leaning on a cactus. And I'm like, that's one of the most racist things I've ever seen in my life. Yeah, there's all sorts of logos like that are racist. As you all know, Teddy Ruxpin was quietly a symbol for the Fifth Reich. I don't know if you knew that.
Yes, well known, well documented, the Nazi history of Teddy Ruxpin. But yeah, we have a follow-up here from our listener who incited Jared's little mini rant. He writes, this is from Uncle Ben. He writes, thanks for answering my question last week. Your sympathy for my plight, as the quote lone market participant is appreciated. I'm sorry I set off Jared's racism detector with my handle. I didn't mean to derail the program. It just happens to be my name, although I do like the rice. So there you go. Jared's not here, but I think he would appreciate that. Or it might set him off on yet another rant about the cream of wheat guy. We'll never know. I told him, Mark, I said, I think that's a good, since he's so passionate about it, I think he has a great area for his own research. Maybe start his own index of the corporate racism index and track those names. And that'll certainly get him. I'm not sure how well the index will perform.
How about Mrs. Chiquita? The Chiquita banana
You can go down a lot of rabbit holes with that.
How about that one?
That'll certainly get him a lot of ink and a lot of press coverage, I think. Whether or not the index performs well is almost besides the point. It'll certainly be a sexy index.
Eskimo pie. Nobody calls Inuits Eskimos anymore.
That's true. And then we need to, throw in things like Speedy Gonzalez, old cartoons. You can go crazy with it.
Oh yeah. No, There's all sorts. Well, how about snap, crackle, and pop for elvish people?
Yes. Deeply offensive to the our myriad elvish listeners. I think we have someone with a elf handle. Yeah, we do have an elf handle here in the listener mail. So maybe our friend there will be offended. We'll get to him in a minute. Next up, we have a question. This one's actually a good one for you, Mark. This comes from Tim Biggs. He writes, any data on that theta-free approach to earnings? What percentage of decay occurs prior to the event versus post-event, and how does that compare to underlying movement during the period? I'm pretty sure Mark here, he's referring to actually what Andrew likes to tout on this show on the option block quite a bit, what he calls his free juice strategy, where you buy some vol, buy some gamma going a couple of weeks into the earnings event, play around, get some free gamma for a few weeks, and then sell it prior to the earnings event. And hopefully your scalps have paid for whatever decay you may have occurred, and hopefully you made some money. He's asking if you guys have any data on that approach and how it works out in the earnings period.
We do not have any data on that, but
what about anecdotally?
Yeah, but I can tell you that anecdotally, I love owning the earnings week, and then as part of a long calendar spread. But the key is one has to be able to properly calculate whether you're still paying too much for the option, right? Because typically they already have a little bit of that value priced in. It's when one can find it not properly priced in that those spreads can work really, really well.
Yeah, exactly. It's got to be, of course, a pricing consideration, because if you just gobble up vol willy-nilly going into an earnings event, you probably won't get the bang for it out of it that you're looking for. And of course, you have to be judicious with your scalp. So that's kind of really what you're looking to leg into, is the opportunity to scalp at some attractive levels. And if you're not familiar or comfortable doing that, then that strategy may not work out for you. You can, of course, just hold it and try to sell it if it moves aggressively in one direction either. But it seems like scalping is the better bet of those two, and that takes a little bit of finesse and wherewithal as well. But still, certainly probably a more effective strategy for the lion's share of our listeners than just blindly rolling the dice through earnings, either long or short, because, as we've said many times around this show, that is still very much a crapshoot, no matter which way you're leaning going into the actual event itself. An interesting one coming in here from George, Mark. He writes, this may seem like a silly question. There are no silly questions, George. We like them all. He goes on to write, but does anyone go out and look at old VIX Cash data from 30 days ago and compare that to the current realized? Isn't that what VIX Cash is attempting to predict? Is that disseminated anywhere as a number or index, something along the lines of a VIX accuracy index? I like that idea, actually. The thought, I was talking about this with someone recently, actually, about the notion of going back, looking at the older VIX numbers from the recent periods and comparing them to realize, and kind of seeing how that calculation, how that prediction, how that guesstimate worked out. We were kind of referring to it jokingly, but he's asking it here in a serious. That's actually not a bad name for it too. The VIX Accuracy Index. I like that. And it's something we kind of do. A lot of us do kind of anecdotally. I haven't seen anyone out there disseminating any real data on this. Have you, Mark?
No, but you know who has looked at this? Actually, the Volatility Institute and the VOLX guys have spent a ton of time looking at that, and so I believe that they would probably likely have that data for you. I'll reach out, but those guys do a lot of study on that, and they don't just make that number is 2 to 4% more too expensive on average out of thin air. All right, that is that. So I believe they do have data on that.
Not to mention, I think it was Bob Kraus from the VOLX that I was chatting about that with last week, so that would probably make sense. So there you go. A very, very timely listener question. I'm sure once they get up and running again with all the other stuff, they probably will be willing to disseminate something like that, and they probably will call it something along those lines. So stay tuned for that there, George, if you're interested in that. I think that is kind of interesting for no other reason, just to kind of see. We talk a lot about risk premium and implied versus realized, but that's really it in a nutshell right there. That's what the prediction was versus what actually materialized in the marketplace. And that's kind of an interesting thing to keep an eye on if you're a regular VIX watcher or VIX trader. Certainly something to have in the back of your mind here. We got someone writing in about condors. I want to save that for Mr. Jared, because that was his bread and butter for quite a long time. I want to give him a chance to weigh in on this one. But you'll like these, Mark. We had quite a few people weigh in about your proposed wager with Mr. Jared there. So I plucked a few of them here.
Oh, nice.
Let's see. First off, we have a comment here from Mr. Tom Staton. This is my favorite of the bunch. He writes, I think both co-hosts should buy Mark a steak, regardless of the outcome, for featuring them on this fantastic program. Well done, Mark. I'd buy you one as well if you ever make it to Alberta. Well, thank you, Tom, and I put my vote in your camp. So I swear I did not write Tom's email, but I agree with him wholeheartedly.
Here's what I would say to that. Why do you think this show is so great? All right, this show is great because of me, and to a lesser extent Jared, and a lesser extent Mark. They should be buying me steaks.
You, who's on about one of every 4 episodes.
I've been pretty good about being on lately.
Your reach is that vast that it gets onto all of the other segments. So I definitely, there's one vote for Tom. I think he's clearly the winner here. But we got some others here. We'll see what they have to say. But I think Tom is clearly, far and away, for all rational people involved, clearly the demonstrable leader.
Oh, yeah. I don't think so.
Let's move on. I'll just mute Mark's channel very strategically here and move on to the next one. All right. We have a comment coming in from another Mark A. He writes, no way that the Fed raises this year. When he loses, I think Jared should fly to Chicago and host a cocktail party for all Volatility Views listeners. I would happily allow him to buy me some tasty beverages. So there you go, Mark. You have someone in your camp.
Thank you. I actually don't think that's a terrible idea. The cocktail party idea.
Yeah, it's not a bad idea. I think Jared probably put it on BGC. They could swing it. And then, of course, some tasty steaks afterwards.
My pocket is the issue.
As long as we have the tasty steaks afterward, it'll be a good combination. And then cigars to boot. Oh, that's a perfect evening right there. I like it. So that's a good comment. You sure you didn't write this in, Mark? It's got a mark here. You're not Mark A, though.
I feel pretty confident about it. Every day I feel more and more confident about rates. I mean, it's, these retail sales numbers just stink and, stuff like that. So I'm feeling better and better about myself every day.
Yeah, certainly as the days go on, we're getting a better sense of whether it's going to come to pass or not. So I'm certainly, as we get a month or two in, we'll probably have a better sense for whether or not this is going to come to pass. Of course, we do have people taking the other side of that as well. This actually goes back to our elfish friends. Hopefully he wasn't, or maybe elvish, he wasn't too offended by your comments earlier there, Mark, about snap and crackle and pop. This comes from Sylvan Elf. He or she writes, regarding the Fed bet, it's a radio program, so the co-hosts can't wear embarrassing outfits. It's probably a good thing. He writes, or she writes, maybe buy the other a pizza of their choice. So Jared would have to buy Mark, and he puts in parentheses, and Mark, so I like this person as well, a nice Chicago deep dish, and Mark would have to buy Jared a tasty New York City thin crust or New Haven style, whatever his preference. So what do you think about those steaks there, Mark?
I mean, I'd rather have my steaks be a steak than a pizza, but it's not
steak
a terrible
pizza
thing.
doesn't float your boat.
I can eat deep dish whatever I want. I can eat a nice expensive steak whenever I want, but I want it to hurt a little bit more than a pizza for Jared.
That's true. The stakes there aren't as high. Maybe a diamond encrusted pizza.
Yeah. Maybe a. I don't know. I'm just thinking. Delmonico's, is that where I should have him take me in New York?
Peter Luger's is the hot place, but if you want to go downtown.
Actually, Wolfgang's is pretty good.
Nice thing about Peter Luger's too is that he'll feel it because it's all cash.
Oh, is it all cash?
Yes, you can't charge.
Oh, jeez. No, that. Yeah.
So he'll feel the pain right away. Which is, if you want, that's your goal. That's the place to go.
I like it.
All right, and last up, we have a comment here from Jeremy Stevens. He writes, I think the Fed will have to adjust their rates before the close of 2015. They are too terrified of inflation and stagflation to sit on their hands. Not sure why a blip in the Swiss franc from early 2015 would set the tone for Fed policy at the end of 2015. Maybe Mark can elaborate. As for the wager, how about the loser gives away 5 free subscriptions to his services to Vol Views listeners? So Jared can give away some BGC research, and Mark can offer his option pit subscriptions. So there you go, a twofer for you, Mark. First off, he disagrees with you, and he wants some elaboration. And B, do you want to give away some items from Option Pit?
Yes, I will do that. And then 2, what I would say is, it's not the Swiss franc that was the driver. It's European QE. And what maybe the listener doesn't, and Jared doesn't understand, is that without doing anything, the actions of the other world powers and other central banks have already de facto raised rates in the United States. So even though the 10-year note's around 2%, and even though the near-term rate is still 0, because the central banks now are pushing their own deposits into negative territory, it makes 0% here seem more attractive. It will actually contain inflation. Then you add in that, which then strengthens the dollar, right? Well, I'd rather have my money in the U.S. earning nothing than in Germany losing money, right? And so what that does is strengthens the dollar. Now, the dollar has gone from about over $1.30 against the euro to now about $1.11. This is incredibly deflationary. All right, a major rally in a currency is deflationary. It makes foreign goods cheaper. It makes commodities cheaper. So inflation isn't going to happen. Now, finally, economic reports aren't that great. We've had some good employment reports, but we have not had any really good retail sales. We have not had, the wage growth, et cetera, et cetera. The labor force participation rate still stinks. So until those get in line, they're stuck between a rock and a hard place. If they raise rates, it's out of stubbornness and stupidity, not effective governance. There's how I feel.
Tell us what you really feel.
Yeah.
But I've been tabulating the votes here while we're doing this. So we have a vote for pizza. We have a vote for giving away some subscriptions. We have a vote for buying me a steak, which I think all of our listeners can get behind.
That is not happening.
We have a cocktail party. I feel I can't make any decisions until Jared, the other counterparty, is here to defend himself. It's a very one-sided segment right now, but that's his own fault that he couldn't make it at the last minute. So there you go. That's what he gets. We should probably decide for him as punishment.
Yeah.
But I would not do that to him. So there we go, listeners. If you have other ideas, get them in soon, because we'll make this something painful for Mark would be good, I think. So come something like that. He has to wear an old Jane Fonda jazzercise workout around the loop downtown in February in Chicago would be, I think, a good one. Something along those lines. I'm just spitballing here. Feel free to elaborate on that theme. Meanwhile, it's time for us to keep on rolling right on into our final segment. It's time to open up the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball segment. This is indeed the portion of the program where we prognosticate wildly and sometimes recklessly about the future, what is to come in the landscape of volatility trading. And since Mr. Jared isn't here, I usually let him go first. I'll dive into the fray instead, give Mark a chance to pontificate over what he thinks to come for the week ahead. But we talked earlier on the show about how already there was lion's share of the market moving earnings announcements were over this past week. We talked about how macro is kind of receding onto the back burner, at least for the time being. So barring any major changes in that going into the next week, I certainly would not be surprised to see us at these levels or even a little bit lower coming into the show again this time next week. I don't see a lot that's really dramatically raising us over the course of the next week, unless we get something that suddenly clips the legs out of this market and we start to see some vol come flooding back in. And short of that, or short of our friends in Greece really going crazy and making some sort of crazy pact with the Russians that sets off Europe, something along those lines, or some really catastrophic earnings, I certainly don't see much really driving us back north of certainly into the 16 or 17 or 18 handle range in VIX land. Now, Mark, let's make it interesting. You take the counterpoint of that and let's argue.
Well, I'm doing, my thoughts would be that, Greece could blow up. The Ukraine stuff, they're still fighting. With the long weekend, there's probably going to be some abysmal economic stuff that comes out. And, oil probably will stay higher. I think there's some there's plenty of risk out there. We're now sitting a couple of points shy of the all-time high. So we've hit this all-time high a couple of times, and each time the VIX has been a little higher. So, I don't think there's a crash imminently coming, but what I do think is that for the first time in maybe 3 or 4 years, the market is in a position where it could do that if something really surprised it. So, where something really bad could happen.
So you're saying probably around here next week, or maybe sharply higher?
Yeah, exactly.
Okay, counterpoint. I kind of felt you might be going a little bit higher, so I wanted to talk it down so we could have a little bit of back and forth. That's my hosting job at the end of the day, to spark some fire here where there could be none. All right, so that's going to do it for the crystal, because we all agree all the time, what fun is that, All right, that's going to do it for the crystal ball segment. It's also going to do it for this episode of Volatility Views. But before we go, as always, let me check in with each of our cohorts here on the old Volatility Views panel, see what they have cooking. Mr. Jared, like I said, couldn't be here today, so make sure you surf on over to BGC Partners. Check out all of his various research going on over there. Maybe sign up for some of their items they have available over there. Certainly interesting and compelling stuff. Speaking of compelling stuff, we also have the option pit, which may or may not be compelling, depending on your point of view. So, Mr. Sebastian, what's coming up in the land of the pit?
Yeah, next Wednesday, we got ourselves a webinar. It's going to be creating income with options. You can register at optionpit.leadpages.net/options/income.
Easily remembered. Maybe you need a tiny URL to send that one out on the show.
Exactly.
All right. So listeners, surf on over to Option Pit if you'd like to learn more and register for that webinar. And on behalf of Mark and Jared, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions and comments. Keep them coming, and particularly the stuff that's very, very painful for these two guys, because it always amuses me. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.